And your revenue numbers are proving it out. In fact, let's go beyond the revenue numbers. Your traffic is actually up considerably to the site, Car Cost Canada. I know we're focusing a little more on the retail side. You focus on insurance also, but on the retail side, Car Cost Canada traffic is up significantly now.
That's right. Traffic over the last 6 months is up over 300% compared to last year, and that has been really our ability to harness Google and everybody's drive to Google to get information, and we've been able to set up a plan with Google directly. We've been working with them to really get people to really recognize what they're looking for and get them to come over to our site and recognize that what they're looking for is actually on our site. And we've been able to drive, like I said, we've almost tripled our traffic. And that basically tells me the great majority of new car buyers are now visiting carcostcanada.com. Are we making money from all of these people? No. But the start is to get them there first.
Right, and the great thing is you have a business model. It's not like your Twitter where people are using it, but Twitter hasn't figured out a way to make a buck yet. If 10 people come to the site and 4 people decide that they want to use your service, they're going to pay you $39.95 a month in order to help them find the best price on the vehicle.
Exactly, and the thing is, whether we sell 1,000 memberships a month or 2,000 or 5,000, my cost structure changes very little.
Right.
So it's almost like having, getting back to your mining example, is like you can sell unlimited amounts of gold or copper or zinc or whatever they're pulling out of the ground, and it doesn't cost you anything to pull it out of the ground. How high does your profit margins go then?
Yeah, I know from our profit margins, same business model, profit margins start to skyrocket once you get to the bigger number because you got a low number of fixed costs. You got your operations, your servers, a few employees, core staff. But once beyond that, you're a variable cost business, and that's important for investors to understand. So every dollar revenue coming in after that certain point has very little expense related to it.
Exactly, and that basically spells out in our quarterly results, right? Because our revenue went up 58%, our bottom line went up 240%.
Yep.
And that will continue to accelerate up because there's really no additional cost to us selling twice as much of our product.
Let's talk about the fact that you're paying out a dividend, which is very rare for any TSX venture company paying out a dividend, and especially for web businesses, again, because most of them don't have a revenue model. They're just trying to figure it out. And you're actually not only paying a dividend, but you're increasing that dividend. When do you expect the increase to take place, or what details can you give investors about the dividend?
Well, we announced the first dividend back in September. It seems like so long ago. That was only last month.
Right.
But no, we're planning to increase the dividend for this year. We haven't decided exactly how much yet. It'll depend on what the bottom line looks like at the end of the year. The way things are going out now, we're paying half a penny. We're probably in the 1.5 penny range, my rough ballpark, depending on where my numbers are going to fall.
Right.
That's a nice little extra that nobody really expects. Like you say, nobody on the TSX pays that. We're in the enviable position because of the way our cost structure is set up. We've got plenty of cash. We don't need to go to the market to raise it. We will be looking, if anything, at some potential acquisitions. If they make sense, we will not take on an acquisition just to take on an acquisition and add revenue to the top line if it's not going to add bottom line results.
Sure. And
so we're trying to build this thing slow and steady. And we've been doing that for the last number of years, and some of our investors have been a little impatient for the last few years, but now that the results are finally coming through, I'm getting a lot of happy phone calls. So that's the key. I think we've never really built this public company with a public company mentality, which is grow revenues at all costs. I just can't run a company that loses money. It just goes against the grain.
I hear you.
So that's why we've built it in a way. All we needed was $2 million top line to produce, a 10% bottom line. And now as we move forward, we're already looking at a $3 million company that's going to have a 20% bottom line, and hopefully we're going to go to a $4 or $5 million company with maybe a 30% bottom line.
Well, given your 52-week trading range, that your 52-week low is 5 cents, and you closed yesterday at 62 cents, your long-term investors may be a little impatient, according to you, but they've definitely done pretty well along the way. And if I could reach out to them and talk to them, I'd say, without giving investment advice, that the web is only beginning. This is really, we have not seen the next boom in Web 2.0 money, and I think you guys are a classic example. In fact, if I had to compare business models, I'd say you have a superior business model to ours, because people need to buy cars, people need the information, And if people can pay you $40 a month for a couple of months to end up saving them $1,000, it's a no-brainer, no-lose situation. The ROI on their money is fantastic.
Yeah, it's not a bad return on your investment.
It's an excellent. Whereas AGORACOM deals with public companies, it's a very limited space. It's a good space, and it's got profit margins. But I think your space is I would reach out to your shareholders and say, now the company has achieved commercial acceptance, generating the revenue, the traffic is coming in. I think from here, this is where the growth begins, even though it looks like the growth may have already taken place. I think this is where the growth begins, and I'm not trying to make any investment, not trying to provide investment advice, but that's one web guy talking to another.
Oh, I agree with you 100%. We're really starting to gain some traction here, and it's just like, somebody told me a while ago, it's kind of like a boat when you've got a little bit of an underpowered engine that you're trying to get it going, but once you get it above the water, it just flies.
That's going to go. Well, good for you.
I think we're just getting there now.
I look forward to talking to you when the next set of quarterly numbers comes out and when any other developments come up between now and then. Really appreciate they took the time to speak with AGORACOM investors, and no doubt with all your new shareholders who are going to be using the hub and listening to things like this. So let's make sure that we keep everyone in touch on a pretty regular basis, Paul.
Absolutely.
Have a great day, Paul. To everybody listening out there, have a safe and happy Halloween. And Paul, congratulations. This has been Beyond the Press Release. Armada Data Corporation trades on the TSX Venture Exchange under the stock symbol ARD. You can go take a look at their exact product and service right now by going to carcostcanada.com. And if you want to find out more on the investment side, get yourself over to AGORACOM, keyword Armada Data, or the stock symbol ARD, and you'll find things like this and much more. Have a great day, everybody. Thanks for joining us, and talk to you again soon.